And CA Rudramurthy, the MD of Vachna Investments, our technical guest for the day. So, sir, if you look at the Nifty setup right now, yesterday also we comfortably crossed the 25,100 levels, but post that we saw a correction. Again, today we are around those 25,100 levels. Do you expect the market to continue to consolidate around these levels for some time now?
Yeah, Saumit, good afternoon. Thanks for having me in the show. Yes, I do agree, and markets are now consolidating. It is in a quiet range and a tight range of around 24,800 in futures. And on the upside, you have resistance at around 25,250. So this is about a 450 point kind of a range or a 2% on index. So I will wait for this range to break out as a very short-term trader and then take a call, or else one has to be very stock specific. However, if you see both fundamental and the technical data, whatever you have, I am expecting markets to break on the downside if we don't cross this 25,250 zone on Nifty future. So whatever up move we are seeing today as well as yesterday, this has been still below the levels of Friday highs what market made. So no doubt we have recovered for last 2 days, but we are yet to even cross the Friday's high. And if you even see Bank Nifty for that matter, 51,700 on Bank Nifty future was the high made on Friday. We are yet to cross that 51,700. No doubt the last 2 days of bounce what we have is yet to cross the Friday's high. So I will be very cautious in market. Reduce your leverage. In fact, reduce from your high beta to low beta, move from mid and small cap to large cap. And this is the time definitely to wait on the sidelines or be in defensive, be very sector and stock specific. Look at pharma, look at FMCG, and you have to also look at aviation as a sector where you have Indigo as the top performer, and crude coming down will definitely help Indigo to further go up from current level. So you have to be very sector and stock specific in this market. Overall on Nifty and Bank Nifty, it is the consolidation phase, and wait for market to cross Friday's high before you take any aggressive buy calls.
Okay, as you were mentioning that one should focus on FMCG and pharma. In fact, for the month of September, if you look at FMCG is the only or the top sectoral gainer so far. Do you expect the September month and the remaining part of this calendar year 2024 to be in favor of the FMCG sector and the index?
Definitely, yes, Saumit. In fact, look at stocks like Hindustan Unilever, ITC, Tata Consumer. All these are stocks which are breaking out of a 10-year kind of a range. And even though last few months, 1 or 2 months, you have seen a huge upside in these stocks, still it is giving you an opportunity as an investor to have them in your portfolio. So I will definitely look at buying only from FMCG and even pharma. And from pharma, if you see stocks like whether it is Biocon, Divi's Lab, in fact, counters like even Sun Pharma, they offer a great opportunity for people to be there. And me being a bit cautious on market, I will definitely advocate bulls to be in sectors like pharma as well as FMCG, and few names which I have already told. And for me, crude oil will come and settle down closer to that $62 to $65 per barrel. No doubt it is very positive to country like India, which imports crude net. But however, we have to understand the concerns are coming because of the demand and not supply. And we have to also understand China is slowing down, and that is clearly indicated by crude oil prices coming down. So for me, it is very clear, be in aviation as a sector where Indigo is a good stock to own, and avoid metals, avoid high beta, and China slowing down is never good for metals. And I will definitely be cautious on market. Reduce your leverage, be cautious, be in only FMCG, pharma and defensive sector, and be very stock specific in this market.
Mentioning the slowdown in China, that is something that has been impacting or could impact Tata Motors as well going forward. The counter is down around 6 odd percent. Do you see more downside?
Yeah, Soumit, Tata Motor clearly on chart tells to me closer to that 920 to 940 zone. You can look at accumulating for your portfolio, but definitely not before. And if you are a very short-term trader, shorting here, Tata Motor may not offer any good risk reward. Stock is already down 5-6%. You should have taken this call when the support broke at around 1060 zones on Tata Motor, not here. But if you want to buy Tata Motor, wait for that levels of around 920 to 940 range. Yes, Tata Motor can come down and settle closer to those levels where investors can look in buying.
Lastly, before we let you go, what are your top picks for the day?
So I'm giving 2 buy calls, and for me, crude coming down will definitely be a beneficiary for aviation as a sector and Indigo in specific. So Indigo can be bought. Look at targets of around 5,500 initially on Indigo with a stop loss of 4,750 on a closing basis. And for me, IEX is another stock which looks very, very strong. I've been recommending this even at levels closer to 170, 180, but even at current market price, IEX looks good. Now I will trial the stop loss to levels closer to 208 and a buy call on IEX for a target of 240 and then 275.
All right, Rudra, thanks so much for giving us those top recommendations.
If you like this video, then like, share and subscribe to ET Now.